Hey folks, Mark Scroggins with another episode of Family Law Talk, and today we have a good friend of mine, Valerie Bracci, who is with us. Hello.
Hello.
How are you?
I'm doing great.
Good.
So happy to be here and see you.
Glad to have you here. So Valerie is a real estate agent, but she also has a ton of experience from owning a mortgage business.
True.
As well. So huge differentiator. We have, Linda and I had been looking at stuff for the kiddo and, thinking about doing something else in this market, and the market is freaking nuts.
It is.
So
it is.
Professionally, obviously, I run into this all the time with people thinking, is somebody going to keep the house? Is somebody going to sell the house? So one of the issues now that I see that is interesting from my standpoint is figuring out what the value of the house is if someone is going to keep it.
Right.
So, it used to be the rule of thumb was you'd want to go ahead and get an appraiser to tell you what the value is. And I am of the opinion now, you can throw that shit out the window.
Yeah.
A real estate agent is going to be much better at determining really what the value is.
I do agree with that.
Yeah. So what are you seeing with the market now? Because it seems like everything is a moving target. Something gets on the market, it is off immediately. I mean, they're just getting crazy offer after crazy offer after crazy offer.
It's true, and we know that from experience,
right?
right?
Yeah, exactly.
It's absolutely true. And right now, that we just don't have enough inventory, and we have a lot of people moving here from out of state.
Right.
Because our cost of living historically has been so reasonable and so stable, although that is changing.
Yeah, exactly.
But it's true, and so it really does drive up the prices, and so we are having to have really competitive and kind of out-of-the-box thinking to even be successful in making an offer and having it be accepted. So,
right. Well, so the one thing that was, blowing me away where I talked about, using a real estate agent instead of an appraiser to determine value.
Right.
Because so often now you're seeing stuff has gotten so astronomical that houses don't appraise.
Right.
And so when I say that, you and I know what I'm talking about, but can you explain to the folks out there, when we talk about something isn't going to appraise,
sure.
What are we talking about?
What we're talking about. Okay, well, so what that looks like is, in this market, we've started using a document called an appraisal addendum.
Right.
Well, that's not the official term, but that's the simplest way to say it. And on that document, you can do a full appraisal waiver, and that doesn't mean that you're waiving the opportunity to do an appraisal because a lender is going to require it.
Right.
But what it means is you're willing to pay the difference in the sales price and the appraised value, no matter what it is.
Right.
So we're talking if it's a $750,000 house and it appraises for $500,000, you're saying, I'll do it, I'll pay it.
Right.
It's unlimited. Now, you can also do a partial waiver if you say I'm comfortable with this amount of a difference.
Right.
So there are different ways that we can structure it. But in many, if not almost all cases, basically the full appraisal is the way to, win the deal if it's a finance deal. But we're seeing because so many people are coming from California and other areas that have cash, that doesn't come into play because really the only reason people get an appraisal is because the lender requires it.
Right.
And so, a lot of people would think, oh, well, I'm offering full ask price. Why would I not get the deal?
Right.
And people that are old school have a hard time trusting me with this.
Right.
And we have to make an offer. As you know, we've talked about these things.
Yep.
And we have to, make an offer, and I can see what percentage over ask houses in a given area go for.
Right.
And we can use that. It's not a fail safe.
Right.
It doesn't mean we'll for sure get it, but it's a good way to start figuring out how much over ask it's going to take to get it.
Right.
And so, and just knowing that, where in the past you used to negotiate if a home didn't appraise.
Right.
You would negotiate. Usually the seller would come down a little, the buyer would bring a little extra, and you can find a meet in the middle. That's not happening as much in this market.
Right. Yeah, it seems to be definitely a seller's market.
It is.
So what do you, one of the things that we saw from the time, like we talked about, from when we started looking at some stuff, the interest rates have gone up dramatically. So, I mean, how much does that impact what a person can buy?
I think it really does impact, especially if they're kind of on the line there.
Right.
You know, if they're really trying to get more house and that low interest rate is really helping them to be able to afford it. If you're on the line there, that small difference in interest rate can be game changer.
Right.
It really can. And, you know, the other thing is people are, in order to pay over ask price, having to hold on to a lot of that cash.
Right.
So, you know, you're having to finance more.
Right.
Because you have to keep your cash to pay for the difference,
Right.
or to at least show that you can
Right.
if it doesn't appraise. And so I definitely think the higher interest rates are you know, causing more people to not be able to, you know, buy the size of home or the price of home that they were able to even a month or two ago.
Right.
Are mortgage lenders not yet, so like in the auto industry, they kind of changed the way that they've done the carries of what they'll advance for a vehicle, right? So where it used to go by the NADA value or the Kelley Blue Book value or invoice, now they've adjusted it to where it goes to MSRP or even 15% above MSRP. So do mortgage lenders not do that as well to be able to sustain, to be able to continue giving these loans to people?
Well, I mean, I think, you know, there are the standard types of loans that conform to the Fannie and Freddie guidelines, and then there are government loans, and they just really want to protect their assets because they're basically lending on it, but at the end of the day, they're left with it. So that's why a lot of times they're requiring the people to bring the cash up front. Now, there are some non-traditional type of lending programs. And so, yes. And so, I mean, I have one right now that is more of a bank statement type loan.
Yes.
And an asset-based loan is another way to say it. So,
Can you explain that a little bit?
yeah, and again, I am not originating those loans today, so things may have changed.
Right.
So don't hold me to any of the details of it. But, you know, a lot of times when we are self-employed,
Right.
people write off so many things that on paper, they may be pushing what they can actually qualify for on paper.
Right.
So short of refiling your tax return and taking out all of those write-offs,
Right.
you know, there are asset-based loans that are going to have a higher interest rate
Right.
because for the lender, it's more risk. But it's a way for people that have cash but maybe not as good of credit to, you know, or they have too many write-offs to still be able to get a home. And
Right.
so we are seeing some of those.
Okay. So with how quickly everything is changing, are you seeing any changes right now with just all of a sudden the Fed is finally taking action on this rampant inflation that we've got?
Right.
So, you know, they just, raised it by 1/4 of a point. Now the discussion is they're going to raise it by another full 1/2 a point.
Right.
And who knows where it goes after that. So are you seeing, and obviously, and that correlates with a change in mortgage rates, right?
Right.
Okay, so going to get a higher rate. It's funny, you know, we had relatively high rates for ever, and then all of a sudden everything fell out with COVID, and so, you know, they were basically giving money away
Right.
if you could qualify. And now we're starting to see everything go back, and what used to be, you know, a normal rate, now you've got rates going above that, you know,
Right.
a pretty fair amount. So are
Right.
you seeing any change in the market related to that yet, or is it just
No.
too soon?
Too soon, I think.
A lot of cash
Yeah.
buyers from out of state.
Oh, no
Yeah.
question.
Yeah,
So
so but
probably
because there are so many cash buyers, and because there are so many offers to choose from,
Right.
you know, we are still able to kind of handpick the offer that makes the most sense for the seller.
So let's talk about that a little bit, because I think there are all kinds of misconceptions about, you know, do they have to take the first offer that comes in that is, you know, list, or how do they, you know, are there certain parameters that they have to adhere to in determining what works best for them? So what is that? How does that work? And what does it look like?
It's a great question because I do think a lot of people have a question about that. Kind of like where the ones who think, well, if I offer ask, why do I not just get it?
Right.
And the reason is because what people are doing more now is listing it, on a Thursday or Friday.
Right.
Doing some open houses, and there are so many offers that start coming in right away.
Right.
People put their highest and best foot forward. So some are at ask price, some are lower, some are higher, some are quite a bit higher.
Right.
And there are all different terms that can play a part in what makes a deal make sense for a seller. So at the end of the day, a seller wants to know who's going to give me the most money, what's the highest we can get the sales price.
Right.
But in addition to that, they want to know, how can I make sure this is going to actually go through? Because, in years past, and even every once in a while now, but, there might be a contingency or something like that. A contingency, like somebody needs to sell one before they can close on the other. In today's market, that's not happening very much. There are just too many other ones to choose from.
Right.
So why risk that? But there are other ways to minimize risk, which is for a seller is a shorter option period. People are sometimes in some of my listings, people are waiving option periods, saying.
And just so everybody understands
Yes.
what that means.
Yes. So what that means is, so during an option period, once a home, first of all, as a buyer, you submit an offer. The seller reviews all the offers, and then if they choose your offer, then you execute the offer, and then there's an option period. During the option period in a standard market, it's usually about 7 days. There is an inspector that comes out, takes a look at the property, highlights any areas of concern, and then the buyer gets another, additional inspections for HVAC or foundation or roof or whatever those may be, and then come back and negotiate repairs. And then once that is negotiated, it goes out of the option period into pending. So in this market, another way to make a deal sweeter is to shorten the option period and make it, so to where it's only off the market for a few short days.
Right.
In the event the buyer terminates and it has to go back on the market instead of the 7 days, that we used to see more in the past. And so in some cases, people are even saying, I don't even care what the inspection says. I want it.
That's crazy.
I won't even take an option. And it happens. I mean, one I closed a couple of weeks ago had that. It helps, like one that went live today in historic McKinney. I'm very grateful because they had an old inspection.
Right.
And so I'm able to provide that so that I can, help someone see that's not as risky of a thing, because here's an inspection. And if you're comfortable with everything in this inspection, you're probably good. So somebody's more apt to do something like that. But yeah.
How old was the inspection?
5 years. Yeah. So It's not brand new. I mean, it was from 2018.
Right.
But at least
So-
they had one.
Yes, but so
Still.
4 years. Actually, that's
Yeah.
4 years. But yes, I mean, but generally speaking. But then I also have a list of upgrades and updates and things that were done since that inspection. And so but I mean, you just provide as much data as possible. But so back to your question, they just want to know what is going to be the best deal for the seller, and the way that you make sure of that is to limit as many contingencies as possible. Limit or get rid of the option period. If some people will even say, if they choose to finance, they'll say, you know what, we will waive the contingent upon financing. So you can there's even a place on the third party financing addendum that you can say, you know what, I am willing to take it if financing falls out, I'll pay cash.
Wow.
In the event that they choose that, we have to prove proof of funds so that we know that they actually have that amount to pay the difference of it. But so that's another way that people are differentiating. Sometimes lending deals can be just as strong if a lot of those contingencies are waived.
Right.
So
I was talking to Mark about this a few months ago about, wanting to buy a home and doing all of these things. And he was saying, well, I think that it'll be okay because there might be a bubble, or the bubble might. Do you even see that coming? Do you think that it's going to go back to, there's going to be a new normal, right? There's going to be a new mean.
Right.
But do you see that it's going to slow, falter?
Not right
regulate
now.
itself. Even with the Fed raising, even with all of those things happening, it's still just coming.
I don't see a bubble bursting, but I see it more what you said next is the normalizing. I don't think that it continue to go like this forever.
Right.
You know, because, you know, and when you read about the people that have had cash infusion, you know, during COVID and all of that, some of those, you know, may tend to lean towards foreclosure now. But the ones that are buying now from out of state, I don't believe we're going to see foreclosures out of that because they're paying the difference in cash.
Right.
Or cash altogether.
Right.
So obviously they had the funds in order to be able to do that.
Right.
So, but you know, we couldn't have predicted this though.
Yeah.
You know, so it's really hard to say. I don't want to promise anything because we're just in a market that we've
Unbelievable.
never experienced before.
Yeah, I mean, the
So-
financing has to catch up to the new
Right,
values at some point,
right.
or else it's going to,
Yes.
Well, that's why I was
yeah,
saying the auto loans
it's going to be a big problem.
continue to just move the needle 135%, 140%
Right.
of whatever that MSRP is or whatever
Right.
that NADA value. They're even
Right.
doing it off of auction prices now for
Right.
pre-owned cars because
Right.
there's no, the MMR is so off, the market value is so off.
Right.
So they'll take the auction slip and they use that as the invoice or how they
Yeah.
determine carry, right? So
Yes.
I would think that at some point mortgage lenders would have to at least because money's going to run, well, according to what's happening now, money's not going to run out, but at some point it has to
Right.
normalize, right?
Right. And I think it will. And, you know, kind of to your question is, you know, I spoke to an appraiser the other day because I always want to be sure that I'm pricing a home the best for my client so that, and there is an art to that as well, but that's not for today's topic, I know. But if you want to know more, y'all can ask me. But, you know, I think, you know, when I was talking to an appraiser, she said, you know, where we used to only use sales data, you know, only sales data, now they're even, if something goes under contract really fast, they know, they can just go under the assumption that it's going to be at or above ask. So now they're even using those as comps.
Oh, okay.
Where they used to not do that. It used to, you know, pending and actives, you know, actives still probably wouldn't matter at this point. But pendings, you know, when it's pending and it's been a day or two, you know that it's at least at ask. And if the appraiser knows there are multiple offers, you know, then that's a whole nother, then you know it's over ask. So, and they're taking that into consideration when they're pricing. And
That's good to know, though.
Yeah, absolutely.
A little bit.
well, and you know, just so that you, the listener, isn't scared, or you, the listeners, aren't scared. You know, many of the ones that I've thought there's no way it appraises, they've appraised. So, you know, there haven't been a ton of horror stories that I've been involved with where there have been huge appraisal gaps.
Right.
So, for what it's worth.
So it
that's,
sounds
I
like
think,
it's
something
catching up.
to note. Yes.
So it's got to be.
Yeah.
All right. Well,
Yeah.
folks, stay tuned. We're going to have lots more questions about the real estate market. And, you know, what I want to talk about, what do buyers need to keep in mind and what do sellers need to keep in mind in this market? Because one of the things that I used to look at a lot, like representing someone in a divorce, was a lot of the time the house is the biggest asset.
Right.
Okay. And so do you want to sell it? Do you want to keep it? And you find some people that have emotional connections to things.
Right.
So what are the different things that people need to consider, excuse me, in making that determination?
Yeah.
Coming out of divorce.
Okay,
So
perfect.
that's one of the things we're going to be talking about when we come back. Stay tuned.